Climbing higher was the title of our monthly report last week. Equity indices are notching all-time highs left and right, up 10% on the year and nearly 20% from the late March trough. Corporate earnings seemingly can't be revised up fast enough, but other indicators are also moving up. Oil is off its peak, but it's moved back up from recent lows. Inflation is trending higher, with ugly prints for both consumer and producer prices. And interest rates have moved up too. Last year's 30-year Treasury bond auction cleared at over 5%, the highest yield in almost 20 years. This week there are a few scheduled events that will move the needle, so markets will zero in on the details in between. On Wednesday, the Federal Reserve will release the minutes of its April rate-setting meeting, during which more policymakers cast dissenting votes than at any other meeting since the 1990s, as a handful of members wanted to change the language in the policy statement to reflect two-sided risk, or a balanced likelihood between future rate cuts, which has been the norm, and rate hikes. However, rather than delivering a whole lot of new information, more importantly, this release may catalyze a conversation on how Kevin Warsh, the new Fed chair, may handle things differently, whether that's in his assessment of risks, his approach to communicating Fed policy to the markets, or just his views on how the Fed may need to change how it reads and forecasts inflation. Q1 earnings season ended with a bang, with analysts revising up their expectations for earnings growth over the next year at one of the fastest rates on record. It's hard to overstate just how robust the rise in corporate earnings has been over the last few weeks. On Wednesday, we'll see the last of the megacap technology firms deliver their results and guidance, and markets will be on high alert for whether this favorable earnings trend looks likely to continue into coming quarters. Lastly, markets will watch closely to see if oil tanker traffic finally starts to pick up in the Strait of Hormuz. Although geopolitical risk has faded from the headlines, energy analysts are growing louder in raising the point that oil really must resume its normal flow, about 20% of daily oil supply, through the strait, or global oil reserves and buffers may no longer be able to keep a lid on the largest oil supply shock in history. So things to watch this week: Federal Reserve policy, megacap tech earnings, and geopolitical developments.
The views expressed are solely those of the authors and do not necessarily reflect the views of First Citizens Bank and Trust Company or any of its affiliates. This material is for informational purposes only and is not intended to be an offer, recommendation, or solicitation to purchase or sell specific investment strategy, any security, or insurance product, and should not be construed as legal, tax, or accounting advice. Please consult with your legal or tax advisor regarding the particular facts and circumstances of your situation prior to making any financial decision. While we believe that the information presented is from reliable sources, we do not represent, warrant, or guarantee that it is accurate or complete. Many companies referenced in this content are independent third parties and are not affiliated with First Citizens Bank and Trust Company. All third-party trademarks referenced, including logos, trade names, service marks, and icons, remain the property of their respective owners. Your investments in securities and insurance products and services are not insured by the FDIC or any other federal government agency and may lose value. They are not deposits or other obligations of or guaranteed by any bank or bank affiliate and are subject to investment risks, including possible loss of the principal amounts invested. Past performance is no guarantee of future results. Estimates of future performance are based on assumptions that may not be realized. This material is not a solicitation of any offer to buy or sell any security or other financial instrument or to participate in any trading strategy. Diversification does not guarantee a profit or protect against loss in a declining financial market. First Citizens Wealth is a marketing brand of First Citizens Bankshares Incorporated, a bank holding company. The following affiliates of First Citizens Bankshares Incorporated are the entities through which First Citizens Wealth products are offered. Brokerage products and services are offered through First Citizens Investor Services Incorporated, FCIS, a registered broker-dealer, member FINRA, and SIPC. Advisory services are offered through First Citizens Investor Services Incorporated, First Citizens Asset Management Incorporated, and SVB Wealth LLC, all SEC-registered investment advisors. Certain brokerage and advisory products and services may not be available from all investment professionals, in all jurisdictions, or to all investors. Insurance products and insurance are offered through First Citizens Investor Services Incorporated, a licensed insurance agency. Banking, lending, trust products and services, and certain insurance products and services are offered by First Citizens Bank and Trust Company, member FDIC, and an equal housing lender and First Citizens Delaware Trust Company. For more information about First Citizens Bankshares Incorporated, its subsidiaries, and its investment professionals, visit www.firstcitizens.com/wealth/disclosures.